Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing some green arrows around the world this morning. After a wild ride last week, we had looked poised for a correction on Thursday, and then that better than expected jobs number on Friday spurred a rally. So Scott, how should we be positioned heading into today?
Well, very carefully, because we talked about either you need very quick feet to try and make some money cute on the short side, or take profits and get out of the way if we retrace lower, or you just take a step back and let the trends work themselves out because they've been very, very strong. And if you look here at the chart of the S&P, you take a look here, once again, and you will see that this trend that's been intact since November has been very, very strong. Here was the first time it looked as if it could break it, and it didn't. Along the way, if you're a trader and you need to maneuver, to create alpha, you had your outside day on May 22nd, led to about a 4.5% correction. This head and shoulders top that led to like a 4% correction. Then this false breakout when the Fed didn't taper led to that, and now here we are. So, there was definitely some maneuvering to do within these trends, okay, or you just sat tight. So anyway, you come into last week and things started to feel a little weird. Okay, the Dow was going up and Russell was going lower and high beta was getting a little beat up, and then you had this really big down day on Thursday, which got me net short. I was net short coming into Friday, and then I saw the jobs number come in, and I said, oh, you know what, this might mean that good news could be good news, rates higher, blah, blah, blah. And then once it went positive, I covered, and then I tried to switch some gears, and now I think it's the same thing you got to do here. Now, if this move is going to take us to new highs, you don't want to see it retrace it. You want to see it hold about 1760, and then perhaps we take out this 1773 to 1775, which would then continue this grind melt up that we've seen since the Red Dog reversal down here at 1655 that led to a nice tradable move.
Well, you mentioned higher rates, and in light of that, what really helped us was the banks. And I know that you actually bought some of the XLF.
Yes. We've been waiting for the banks to get better. And I even tweeted out the 10 o'clock or 10:38 in the morning. The banks are, engulfing the prior day first. There's some potent activity there. If you weren't in any banks, pick one. Or at that time, I just went with the XLF to get a basket of them. So you look here, and the chart that's had a really nice trend for most of this year has been intact. And now finally, you got a day one. We talk about what does a day one look like? Well, here is your day one in the XLFs. It cleared this descending channel with authority, took out the prior day, which is saw the spiders did not. So now I'd say, you know what, put a little line here. As long as it stays above this 2060, which I think it will, you're going to see a move above this 21 area and make new 2013 highs, which would be helpful for the banks, and traders love to trade the banks when they're moving around.
Right, and just checking in on some of those names, I mean, we saw Goldman Sachs pretty volatile during the last two trading sessions, but does it look like it's getting ready for a breakout?
You know what, it looked great and then it failed and then it bounced back. It's a little hard to handle, short term, but the chart is building, and if you look here at Goldman, you will see that, you still have this trend that's somewhat intact, okay? This is definitely not easy, guys. Like, I'll tell you, at first it looked like a short, first it looked like a long, right here. If you take a closer look here, it looked like it was gonna break out, remember, above this little area. And then it got engulfed, so you probably got out of your long, and some people got short, and then it opened up, and then it closed here. So, to me, I'm going to just kind of stay away from Goldman unless it gets a little bit easier. As far as resistance, really 164.30 is now your key resistance.
Would Morgan Stanley then be any easier? What do you think of this pattern?
This pattern, I think, is a little better. It's a little tighter, it's near the highs, and it's also a lower price, so there's a little bit more liquidity there. You look at Morgan Stanley and you'll see that it has been in a strong trend also. It did not pull in as much as Goldman, and look how close it is to these highs. It wasn't that strong on Friday, but it did try and engulf the prior day. So at this point, again, either quick feet or let it go. So if you want to be long Morgan, be long verse 20, just say maybe 28.75, and if you're looking to add a tier, just say this is day one and you're looking for day two, it's got to get above 29.60, and then those are the highs right there. And I do think this is perhaps an easier setup than Goldman.
How about Bank of America? Outperformed its peers on Friday, gaining 3.7%. What do you think? Could we get some continuation there today?
Now, this one I've been waiting for. This has been a focus of mine to keep in the drawer for the majority of 2013. I got stopped out of it like a few weeks ago, I think maybe 1430-ish. And you look here now, this is the type of thing you either want to just hold, and I do think we have 17, 18, 19 next year, or you want to trade, but sometimes you can miss it. You look at the trend's been intact. There's been lots of areas to add. I remember this one, remember this one, and then this one, and now this is a pretty long base. This is like 4 or 5 months now. So with that being said, look at the size of this move, okay, on Friday. This is a nice day one. My strategy usually is, you take a feeler on day one, you add to it day two, and then day three you sell, but whatever. At this point, I would say 14, 15. If this is going to stay in play and going to be perhaps at new highs this year, it's got to hold above 14, 15, and then you have, a nice area up here. So there is some room between where it closed and the highs if you think the bank's going to make new highs.
Citi joined the rally as well. If you're interested in playing this one, what would be the levels to watch?
This one took back most of the moving averages, so it's in the game also. It engulfed the prior range. So Citi as well. You look at the chart here, potent. It crossed above this little lower pivot, took back some moving averages. It's definitely going to have some resistance coming into, just say, 51. It did hold this, higher from this last pivot. Just don't pick them all. I mean, you don't need to be in each one of these. You need to pick, one or two that you like if you want bank exposure. So, in my humble opinion, I think maybe you take the XLF to have some, some exposure, and then if you want a little bit more, alpha created, I think you go with like Bank of America and Morgan, or like just Morgan and the XLF, or don't be in 6 of them, be in 2 or 3, or 1 or 2 even.
Right, the ones you feel the most comfortable with.
Yes, exactly.
All right, well, coming up, we're going to go in the trenches with the Ags, where we see some potential opportunity setting up. But first, this quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
As money continues to rotate, the Ags have been perking up. We're going to see what kind of opportunities lie there, starting with Potash, which has a bull flag above the 8-day.
It does, and a lot of us have avoided this sector or tried to avoid this sector, and we've been looking for this lower level opportunity with this gap in front of it, and I think it's here. I bought a little bit on Friday, and I'm looking to add. Here's the gap from that last big article that came out. Stock was a heck of a lot higher, before that even, and now it's getting really nice and tight. So with that being said, I'm in small, and if it could start really getting above, just say 33.20 with real volume, like you see that volume start coming in there, I think we get a nice trade to fill this gap, some of it at least.
And Mosaic triggered the buy price of 47.10 that was listed in off the charts before the stock had earnings. So now that it triggered that, what's next?
Well, this is in the gap. This is what I'm looking for with POT. So if you want to look at the group together, that's a good thing to do. Okay. You look at MOS, and it already is clearing above resistance, closing strong, on its way to fill that gap. So once again, you go back to POT. If you want to try and trade them together and look if one goes, maybe there's other attention in the group. That's why I think that this one should be an A setup this week for continuation. So at least you got to watch it.
What about the setup in Agrium? That one gained more than 2% on Friday. Think we can get some more upside continuation there?
This one's a little different, but there's a huge level that it's trying to clear. And once stock clears a level, sometimes it opens it up for a move. And a lot of fund managers are trying to play catch up, so maybe this area. You look here at AGU and you'll see different pattern than Mosaic and different pattern than POT, but you look across here, this has been since April, May, June, like almost, 8-9 months where this sideways channel hasn't done much. So at this point, maybe it really starts getting above this, and you could see a move back to 100 or so, come into year end or maybe a little bit further. But as of right now, it reclaimed the moving averages. It's been under consolidation, so it could be on your radar. It looks at least a little bit more set up than it's been in a while.
And how about CF Industries approaching resistance of about 220? Do you think it'll have enough power to get through?
This one's been like the strongest one out of the group, and it was down after earnings, but all of a sudden it's a week or so later and now it's back at highs. So that's showing me that they're giving a pass to earnings, which sometimes they do for these Ags until they start coming around. You look here at the chart. I do remember we started looking at this, remember when Third Point took its stake here, and then you had a nice tradable move here. And then, you know, it's choppy. These things are really choppy, but, you know, they can move. And look at the day that it had on Friday. So this is showing you that, you know, there needs to be a leadership stock here. This one is showing leadership. The other ones have just better lower level setups.
All right, time for some quick hits here. Let's talk Apple, which looked like it was about to succumb to some pressure there, but it's still hanging in there.
Yes, and this, I know I've been frustrated with it, but when I look at the chart, I'm like, oh, let me just put this in perspective, the type of move it's had since 2 quarters ago and where it is right now. And if you look right now, it still looks okay. This was the last quarter, came out with earnings. This move was fast and furious, and it gave us a really nice trade. And then, since then, you know, it's been a little volatile. Here is that move lower to retest that prior breakout. Then it held higher. Finally, we had a nice clean move here. And then you had that earnings day where it opened up and somewhat failed. So that takes some time to work off. So if it were to be worked off, it's going to have to start clearing this soon. So with that being said, still above the 21-day. It did hold in there. You know, it looked as if it was going to, you know, go lower, which you have to watch the action. It closed on the 21-day and then reversed. So you have 2 levels here. One, if it starts getting above Friday's high of 521, some might cheat to get long, but really it's got to clear this with some authority. Somewhere between 525, 527, a clear on volume above it. Then perhaps it gets that Christmas move that a lot of people are looking for into new 2013 highs.
How about Twitter? Despite all of the headlines about Twitter soaring, it actually failed the first day, technically. So what now?
I'm probably not even going to, I didn't trade it once on Friday, just because, you know what, I tried it on Thursday, I lost money trading it on Thursday, and just because I was, I don't know, a little aggravated. I thought perhaps it can go. It went from, what, 45 to 50 real quick, and then back to 45 just as quick, which was definitely not a good trade. And then it closed at 44.90, so the headline said, Twitter soared. Meanwhile, it's 20 cents lower from where it opened, and then it was down another 3 on Friday. So you look at the chart now, you know, I don't think the investment bankers did a good job. If they did, it would have opened up at 35 and closed at 45 instead of opening at 45, going to 50 and closing here. Then obviously you saw some more downside follow through. So really short term, if you're going to be trading it, just watch this level right here. This is 40.69. If it trades below it, I don't think people could short it out there because it's the first few days till the IPO. Just get out of the way if you did buy it, saying, oh, wow, some people paid 48.49, let me pay 42. If it breaks below this, I would say use it as a stop because you don't know where it's going to go. At this particular point, all you do know is that this is the pivot. And to me, I think it becomes, you know, perhaps advertising or exciting if it could, you know, work its way down closer to 35 and then look for some type of reversal versus right here, but we'll see.
All right, well, from one social networking stock to another, how about Facebook? Would you look to potentially play this one today?
I'm actually coming in a little short Facebook. You know, we talked about in December that it could be a stock that goes back to the IPO, or I think with Kramer we did that, and it exceeded all those targets. And now, you know, I would say this pattern, a lot of people are looking at it, but I think we think a lot of people are looking at it because we all have the right people that are technicians that we kind of follow. So with that said, you look at the pattern here. You know, the stock's had a tremendous move since earnings. This was the cup and handle pattern back here that ignited. You had a really nice tradable move until finally it filled the gap and worked its way lower. And then you had that earnings day volatility that wound up grinding lower. And this does look a little like a head and shoulders top. Left shoulder, head, right shoulder. So if it does start getting below 47.25, and then this is 40, I think 650, and closes below there with some type of authority, you know, you could see a move back down to the measured move, which I think is closer to about 42. And then you're still almost a double from where it was around 25. So perspective-wise, it's fine. Things are allowed to come in. They create better opportunities.
All right. How about CME? It had a huge move on Friday, gained more than 4% and got back to highs. So looking to today, do you think maybe we can get some more upside continuation?
This one looks like a chosen one. You know, big day on Friday, so it's showing its leadership abilities. You look at the chart here. I haven't traded this one in a while, but some guys were looking at it. So you look here. This is very potent. Look at the size and power there. It cleared this area right there. It's coming into resistance right here. So it's going to have to get above this, and then it's at prior highs. It's been in a nice base for a long time, right? For what, 5-6 months. So this does look good. So above Friday's high of 78.03, it can continue.
And over in the solar group, First Solar actually showed some real relative strength last week as the stock held the 8-day while the rest of the market was pretty volatile. So what do you think of the composure of this one?
Well, this one had good earnings, which was somewhat surprising, but it hasn't been that surprising because this group has been one of the go-tos of this year. You know, the solars are all left for dead, and then they've all had bounces from time to time, but you know, they actually started to get sustainable. Here is your, I guess, earnings gap, quick move, retracement. So in order for something to get momentum, this is a candidate. And you have the high here of 62.38. So, take a look at it there. If you look at the monthly chart, people are like, oh, look how much it came up. You look relatively speaking, look where it was. So if it wanted to work its way back to here, going into 2014, it does look like it can. So don't just say because where it is now you can't touch it. You look at the different time horizons there. This looks set up and strong. So until it doesn't, stay with it.
All right, well, you've mentioned quick feet a lot, staying nimble. What do you tell people heading into the trading session today?
Well, I would say after the size of the move we saw Friday and last week's volatility, I wouldn't expect that much in the indices, but things always change throughout the day. So I would hope that maybe some digestion, hold the top third of what we gained on Friday, digest a little bit, and then I think we'll have better setups to go with midweek for continuation. It would, I think, really frustrate people if we opened up and we just drifted lower and people tried to buy the dip that didn't buy Friday, or if we just took off today and then there was no time for anyone to, reposition.
Right.
So with that said, I think, again, you either really have to have quick feet, no opinions, and a plan to execute quickly, or you just sit back, you have your macro plan, you have your positions and the big trends that have been intact for over 2-3 years now, and you let it go. If you're a trader trading for P&L, you have to be that much more selective. I think this rally is getting more and more narrow, and things are changing their composure, very quickly, that you have to notice, like a Tesla, couldn't rally after earnings and got hurt, lost 100-day, and like you take a quick look at Tesla, and you'll see that, finally reversed a little bit. Trends are only good until they break, and this one, remember, started breaking right here, and then we don't take stock into earnings, and then that could happen. So just know your time frame. Now it looks like Tesla could, perhaps retrace back to this area, but it's not going to have the same type of action that we saw for the prior 6 months here. So things do change, and if you are trading the high momentum, high growth names, you got to be there, and you have to be aware of when it does and not have an opinion and just go with the change.
All right, well, with that said, that's your morning call for this Monday. Happy trading.
One more thing. Don't go. Happy Veterans Day. Say thank you to a veteran out there. This morning I wanted to say thank you to my dad because he made it home. If he didn't make it home, I wouldn't be here.
There you go. And with that said, happy trading and have a great day.